students, welcome to offline classes from Simple School. So today I will be discussing the same topic, that is journal, as I have already uploaded one video about the journal. So today we will be talking about the same topic. We will be discussing about the same topic, that is journal. So today, without wasting our time, let us journalize some transaction which is very important. Okay, so chalo, let us start. The first journal those who did not see the video, the last class, you please go and visit the YouTube channel and you will see the video. Without the previous class, you will not understand anything in this class. So it is my advice to all of you, those who did not see, go through the first video, then come to the second video. This class will be the second part of your journal. Alright, come on, let us start. So I will show you some compound journal and some simple journal. First of all, let me show you some simple journal. Okay, some simple journal. Alright, so the first transaction is purchase goods for rupees 50,000. Purchase goods for rupees 50,000. Alright, so I will not show in a proper format. The proper format I have already shown in our last class. Please go through the class so that you can understand the proper format of your journal. So I will be showing only the recordings and the narration. Alright, come on. Purchase goods for rupees 50,000. In this transaction, there are two accounts. One is purchase account, another one is cash account. Remember one thing, in every transaction, at least there will be two accounts. So now you have to understand which are the accounts will be present in a transaction. So in this particular transaction, there are two accounts. One is purchase account, another one is cash account. Why purchase account? Because the name of the goods is not mentioned in the transaction. If the name of the goods is not mentioned in the transaction, then always it will come under purchase account. Understood what I told? If the name of the goods is not mentioned in the transaction, then always it will be purchase account. Alright, one is purchase account, another one is cash account. Okay, now purchase is what? Purchase is expense of the business, and according to the nominal rule, according to the golden rules of nominal account, all expenses and losses are debit. All expenses and losses are debit. Purchase is what? It is a one kind of expense. So the journal is purchase account debit. According to the nominal rule, all expenses and losses are debit. So purchase account debit to cash account. Cash is going out from the business. If you purchase something, that means you will give the cash. So cash is going out. Cash is an asset. It will come under real account. Cash is going out. Alright. So that is why if cash is going out, then it is credited. So to cash account. How much? In the debit column, it is 50,000. In the credit column, it is 50,000. So the narration will be being goods purchased for cash. Being goods purchased for cash. Alright. So this is the transaction and this is the entry of your journal. Purchase goods for rupees 50,000 means there is two account. One is purchase account, one is cash account. Purchase will come under nominal account, cash will come under real account. According to the golden rules, all expenses purchase account debit. Now come to the cash. Cash is going out from the business according to the real account. Credit what goes out. So cash is credited to cash account is 50,000. Alright. Now come to the next journal. Next journal is, say suppose withdrawn cash for personal use. For personal use, rupees 10,000. Withdrawn cash for personal use, rupees 10,000. So this is the transaction. Now first of all, if you see any transaction, you have to identify how many accounts are present in a transaction. In this transaction, there are two accounts. One is drawing account, another one is cash account. Why it is drawing account? Because the cash is used for the personal use. Any amount, any business amount, if it is used for the personal use, that means it will come under drawings account. I repeat, any amount, if it used for the personal use, not for the business use, if it used for the personal use, that means always it will come under drawings account. So one is drawings account, another one is cash account. Okay. Now drawings is what? Drawings will come under personal account. And cash is an asset, so it will come under real account. Now just remember the rules. Rules of personal account is debit all receiver, credit all giver. Drawings is what? It is a personal account. So drawings will be debited because it is receiving the amount. Debit all receiver. According to the rules, drawings is receiving the money. So it will be debited. Drawings account debit. Drawings account debit. 2. Cash is going out, isn't it? Cash is going out from the business. Cash is going out from the business. Cash is a real account. The golden rules of real account is debit what comes in, credit what goes out. So cash is going out, so it will be credited to cash account. Alright. So drawings account debit to cash account. How much? 10,000 is debited and 10,000 as well as 10,000 is credited. Narration is must in the journal. Without narration, the journal is not complete. So the narration is always start with being. The narration will always start with being. Any journal will, the narration of the journal will always start with being. Being cash withdrawn for personal use. For personal use. If any amount is withdrawn for the personal use, then it will come under drawings account. Remember that. Alright. So drawings account debit to cash account. 10,000 in the debit column, 10,000 in the credit column. Okay. Now, these are the two transactions which I have shown to you. Now, these transactions are simple journal, or you can say simple transactions. Why it is a simple journal? Because if you notice carefully, if you see the first transaction, one account is debit, another account is credit. One account is debit, another account is credit. If you see the second journal, one account is debit, another account is credit. Means what? One debit account, one credit account. So this type of journal is called simple journal. Alright? This type of journal is called simple journal. If there is one debit account and if there is one credit account, so it is known as simple journal. Now let us see the compound journal. How the compound journal looks like or how to record the compound journal. Alright, so this is what simple journal. Why simple journal? Because here it is one debit account, another credit account. One debit, one credit. Here also one debit, one credit. One debit account, one credit account. Alright, so this type of journal is simple journal. Now let us do the compound journal. Say the transaction of compound journal is purchased goods for 10,000 from X and discount received. Purchase goods for 10,000 from X and discount received 500 and discount received 500. So this is the transaction. Okay. Now tell me, after reading this transaction, how many accounts will be present in this transaction? If you identify purchase goods for 10,000 from X and discount received, let us write the accounts. How many accounts is present in this transaction? One is purchase account, because the name of the goods is not given, so it will come under purchase account. One is your X account, the name of the person is given X, so one will come under X account. Another one is discount received. Another one is discount received. So in a transaction, there are three accounts. One is purchase account, one is X account, one is discount received account. Okay. Now, tell me, simply, if you think, if you purchase any product or any item from the customer, from the shopkeeper, you are the customer. If you purchase any item from the shopkeeper, then will you get the discount or will you receive the discount? I repeat, there are three transactions: purchase account, X account and discount received account. There are three accounts. One is purchase account, one is X account, one is discount account. Alright. Now purchase is what? If you purchase something, that means it is your expense, isn't it? If you purchase, that means it is your expense. Money is going out, so that means it is your expense, and expense will come under nominal account. Okay. Now X is a person, he is an individual, so any individual will come under personal account. Alright. Next is what? Discount received. Now tell me one thing. If you purchase anything from the market, then will you get that discount or will you allow the discount? Or you can say, will you receive the discount or you will allow the discount? Obviously, you will receive the discount, isn't it? You went to the market, you purchase some item. Now, if you get discount, that means it is your discount received, isn't it? That means it is your discount received, and discount received is the gain of the business. Discount received is the gain of the business. So it will be recorded in the credit side. According to the nominal account, all income and gain is credit, all expense and loss is debit. Alright, so the journal will be purchase account debit. Purchase is the expense of the business, so it is debit. Purchase account debit. Who is giving the item? X. account to you are receiving the discount. It is your gain to discount received. To discount received. According to the nominal rule, any income is credit. So discount received is gain or income. So it will be credit. Alright. So discount received is how much? 500 rupees. Okay. So X will get how much? The price of the goods is 10,000. X will receive 9,500. How much? X will receive 9,500. How? The price of the goods is 10,000. Now the shopkeeper gave you discount of rupees 500. So 10,000 minus 500 is 9,500. The shopkeeper will receive. That means we will pay to the shopkeeper. Isn't it? So to X account 9,500. Alright. So this is what. Now if you see it carefully, if you notice carefully, you can see here there is only one debit account and two credit account. One debit account, two credit account. That means this type of journal are called compound journal. This type of journal are called compound journal. If there is one debit account and another credit account, if there is one debit, one credit account, that means it is a simple journal. And if there is one debit account and two credit account, that means it is a compound journal. If there is two debit account, one credit account, that means it is a compound journal. So this type of journal is called compound journal. Alright. Now come to the next transaction. Now come to the next transaction. Next transaction is what? Next transaction is, say suppose, sale of goods for rupees 6,500. Sale of goods for rupees 6,500 and discount allowed rupees 500 to X and discount allowed rupees 500. To X is not required. So the transaction is what? Sale of goods rupees 6,500 and discount allowed rupees 500. So this is the transaction. Now whenever you will record any journal entry, remember you are the business. Think according to the business point of view. Now you are the business. Now if you sell something, if you sell any item to the customer, that means you will give the discount, isn't it? If you purchase, you will get the discount, that is discount received. If you sell something, you will give the discount to the customer, that means it is discount allowed. And discount allowed is the loss of the business. Discount allowed is the loss of the business. So any loss is debit. Any loss is debit. Let us record the entry. Alright? Debit column, credit column. So how many accounts are there? There are three accounts. One is sale account, another one is cash account, and the third one is discount allowed account. Okay? So now, if you sell something, if you sell any product, so cash will come in the business, isn't it? If you sell any product, cash will come. If you purchase anything, cash will go out. So now in this transaction it is sale, that means you have sold the goods. Now if you sold the goods, that means cash is coming in the business. If cash comes inside, that means it is debited. If cash comes inside, that means it is debit. So cash account debit. Cash account debit. Now discount allowed is the loss of the business. Discount allowed, you are giving the discount, and obviously it will be loss of the business. So discount allowed is loss of the business, and according to the nominal rule, all expenses or losses is debit. All expenses or losses is debit. So discount allowed will be debit because it is the loss of the business. Discount allowed account debit. To sale account. To sale account, because sale is the income of the business, and according to the nominal account, all income and gain is credit. Sale is the income of the business, all income and sale is credit according to the nominal account. So therefore sale account is credit. Now let us record the amount. So cash account debit, discount allowed it will be 500. To sale account it is 6,500. So the business will receive cash, that is 6,000. The total price of the goods is 6,500. We give discount 500. Then how much we will receive the cash from the customer? That is 6,000. Alright. So the narration is being goods sold and discount allowed. Being goods sold with discount. Being goods sold with discount. Okay. Now if you see the debit and the credit column, always it will be equal. So if you see the debit is 6,000, one account is 6,000, another account is 500. So 6,500 in the debit column, and in the credit column also 6,500. Always in the journal entry, the debit side and the credit side will be always equal. Okay, the debit side and the credit side will be always equal. So this type of journal is called compound journal. Why it is called compound journal? Because here we have two debit account and one credit account. Here we have two debit account and one credit account. So that means this type of journal is called compound journal. If there is one debit account, one credit account, then they are called simple journal. If there is more than one debit account but one credit account, this type of journal are called compound journal. Okay. For today, let me stop here, and in my next video, I'll be explaining you